Picture this. You're not just fixing cars, you're living your passion every day. At Cox, you'll work on a diverse range of automobiles. Surrounded by a team of friendly, like-minded individuals, you'll enjoy great pay and benefits. Ready to make this a reality? At Cox, we're recruiting auto and diesel techs to join our Mannheim and Fleet Services teams. Learn, grow, and fine-tune your career as a technician at Cox. Find out more at cox.careers/autotech.
All right. So in tech, real estate, and finance, you've got a bunch of gurus, or at least so-called gurus in the space, telling you how to make money. You don't hear about winning investments in film for individual investors. Why?
Well, let me start by saying I agree and disagree with the premise. But in general, the reason is the model and the risk-reward ratio. In tech and stock investing, you have highly understood leveraged products with highly understood returns. For example, if you decide to be an angel investor in a new app that's going to sell in app stores on everybody's phones, you don't need to know how to code or animate or understand the supply chain to be successful. If you're going to invest in crypto or the stock market, you don't need to know the inner workings of the Dow Jones or Coinbase or the New York Stock Exchange. You only need to download a stock trading app or hire a broker. That's because those markets are so big and ubiquitous that we intrinsically know how the money flows in and out. We see the risk involved and know how generous the rewards can be. Film is more opaque. Of all the investment types you mentioned, real estate is the closest proxy to film. In both, you can invest in standalone projects or invest in a series. You can go it alone or align yourself with corporations and developers. And you have to know a lot about what makes for a good product. You have to follow the mood of the markets, understand when the budget is bloated. You have to know the difference between execution and excellent execution. You have to have unmatched judgment and taste. And above all else, you have to know how and when the money flows in and out.
Okay, so it sounds like you mostly agree with my observation. Which part do you not agree with?
Well, I think there are several highly successful investors in film. Perhaps not as many in independent film as in studio film, but there's quite a few. Those investors are often tied to a specific producer or director, playing long-term games with long-term players, a concept we talked about on several episodes in the past of this conversation. You can also sit down with the filmmaking team and ask them the same questions you would ask a startup founder. For example, investors should ask their producers, what's your plan to 100x our money? Even if that's unlikely in a financially successful film, it's the right type of question to ask. The bottom line reason you won't see film investment gurus on the internet is that you can't sell a 5-step formula to investing success. Film and art in general just don't work that way.